do I do it? What are the two ways now that I can do it? A lower time frame and a higher time frame. Yep, either one. Just like we did with EU, right? We went 12 month, then we went lower. Beautiful. So let's go to a 3-day and see what's happening. What kind of model is this in? Right? So again, let's look at it first of all from here. So what is that model? He says reaccumulation, but that's redistribution. Again, off the mark, quite a little bit off the mark, but redistribution, right? What did I speak about? I even drew it for you. Lower, 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 breaks higher. 1, 2, or 3 times. Right? Hopefully not taking out like the high up here, which it didn't, right? The expectancy is redistribution on the 3-day. Now, at the same time, if we try to incorporate more, what do we see? What could this be? People are saying reaccumulation. Good. I believe it is. Let's check. Right? Higher, higher, higher. Breaks down what? 1, 2. Yep, breaks down twice and then breaks long. So that's actually a very, what? Bullish or bearish sign? Bullish sign. And is it delivering from the SSC where it made that singular bullish MB from? Okay, so more uncertainty. So now actually, if we go back to the daily, does this make more sense as a redistribution or as a double MB accumulation? There we go. This is what you see me do when you watch me do an outlook and I go very quickly through timeframes. This is what I'm looking for. I'm proving to myself what independent timeframes and independent models are lining up with each other and they're given deliveries. So just now you saw me go from bullish to bearish to bullish to bearish to go, yep, this is bullish. And I want to see the delivery now of this high. Right? Because again, we are working through contexts. Context. So we know that this point was actually that 3-day SND. From there, we created a 2.0 delivery that has now just been met again. But at the same time, so it's now a 2.0 again, but we've also done 1, 2, 3, 4 intermediate MB pushes up. So it's actually not too bad. We can still use these bullishness. So yeah, this week, there's actually nothing wrong with trying to potentially look for longs here. But now, if we are watching for longs here, what should we look for in a lower time frame? Reaccumulation or accumulation or other models that prove, right? Other models or structures that prove what's going on here. So yeah, currently this is the daily 2.0 that is still very much true, right? So the model or the S structure we're in is this one, right? And that's also supplemented by that 3-day one that's delivering right now. So this is also showing bullishness now. Notice how we went from going, okay, it's actually redistribution to it could be, it's redistribution, could be reaccumulation here. So now what are we looking at? Are we looking at this as a redis? Or are we looking at this right here as a re-uck? As a re-uck. But do you understand why we're looking at the re-uck? Do you think we just randomly flipped the coin and said, oh, reaccumulation? Because of context. Exactly. Right? Very, very powerful. Now we can jump higher because again, now we're seeing that there's still uncertainty here. We know that there's bullish signs, bearish signs, multiple. This is why when you see me do an outlook, I'm like, okay, let's see what we got here. I'll go like this. I'll go like, okay, got it. Okay, cool. Makes sense. And then I'll start marking stuff up because I'm looking for the models we're in. That's why you'll see me jump through them. Now I'll do everything I just spoke about for the last hour in about 5-6 seconds. But the point is that's what's happening in my mind. This is how I'm using those concepts that I'm teaching you. It's not like I'm just randomly doing things every time, right? Now, if we do go to a monthly, at this point, it's just double MB up and there's nothing for us to do here, right? At this point, you can't just be like, oh, it's bullish double MB. This could play around here for too long. So at this point, that lower time frame doesn't matter too much in the monthly and it's double MB, so it can do anything. So I'll just ignore that there. Weekly makes a lot of sense for a reaccumulation. 3-day makes a lot of sense for a reaccumulation and is delivering with the singulars, and off the daily is now delivering with the intermediate clusters plus the 2.0s. Now, if we start stepping down, we can ask ourselves if other things are supporting it. So look, what model is this, guys? Stepping higher, breaks down, breaks up. That's a reaccumulation. Is that coming hand in hand with the thing we're expecting? Okay, so is this a market that's contextually at the moment actually pretty sound? Yeah, it's very powerful. So this week, you already probably know what I'm looking for. Now let's go a little bit lower, because again, we can further prove this. Does this support the model? What model is this in? From, let's assume from, hold on, from here. What model is this in? Yep, reaccumulation. What model is it in from here? Yep, accumulation. Exactly. So a lot of things are supporting each other together, right? Now, if we lost this low, there's a chance we could maybe step away, because now we're losing the cluster buildup off the higher time frame. We're losing this model, which now becomes what if this breaks and displaces? What can this model become? What does it make more sense now as? Yep, a distribution, not a redistribution. Motherfuckers. Two things. Accumulation, reaccumulation. That's all it can be. Accumulation, continuation, comes against continuation. Overall accumulation, back and forth, back and forth. Is this back and forth, or is this down, 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 up? It's back and forth, man. Come on, guys. Let's go. At the same time, we can follow the intermediates here, for instance. Right? So what is this? Is this a valid area to trade off of? What does it act as? Yeah, that's a 4-hour 2.0 now. And it's also an intermediary MB1. So now not only do you have an intermediary MB supplementing, but you also have the 2.0 supplementing it. So it's a pretty powerful zone. You can probably expect a good mitigation here to start putting in longs. You probably will see me trade a 5-minute burst or triple M inside of here this week if it gets there. Now, if you are trading a lower time frame, what model is this right here likely in? Don't make me mad, guys. It's accumulation. Guys. Back and forth. Most recent break is long. How is this a reaccumulation? The most recent break is up. Right? And most recently it had 1, 2, 3, 4, 5 MBs down. That's an accumulation. Does that support our underlying ideas behind this market? If the 15-minute displaced this low and came into the zone that we still want to trade, what would this model be considered right here? Reaccumulation. Sebastian, how is it a distribution, bro? The expectation is bullishness, right? And then we have a stair step to the top side. So what is one break against it? Reaccumulation. All the brains are broke. Guys, I'm just saying, the fact that we started with 160 or so and are still at 123 despite being at nearly 4 hours is fucking bonkers, guys. Okay, that's disgusting. That's insane. Because like college courses can't do that, guys. College courses can't retain attention that long, okay? I saw one question here. I want to go up and find it. Someone said something about something. Well, no shit. Of course someone said something about something. Oh yeah, right here. So BE. It's weird that EU and UJ are both bullish. And look, this is the cool part. I agree. It's so weird. But that's the beauty about what we do. We don't discriminate behind this correlation bullshit, right? If you really want correlation, you would compare like very correlated pairs. But here, if both want to show us bullishness, I'm going to follow both bullish. If this one fails, this one's probably going to start delivering beautifully. Or vice versa. Right, but look, even like this week, this came down hard, and look what UJ did all week. It came down hard. They're moving in tandem. And many traders that are used to like, oh, correlation between UJ and EU, the ones that are used to that are sitting there going, what the fuck is happening? Right? Those traders are getting liquidated right now because usually what they would do is if EU's going down hard and UJ's going down hard, they'd buy one of them, right, and start making money. But here, neither of them is being able to be bought. And now they're both going to go up. And they're going to be like, what the fuck? This is why we learn context and analysis, not specific just correlation. This is why I don't teach correlation as a standalone thing to determine direction and stuff, right? But the reason it's so important to realize that this happens is because we're looking at EU and UJ, which are like, there's some different pairs there. So like, imagine if EU was really strong, right? If EU's super strong, right? Then this will go up, right? I think. If the euro becomes very strong, this will go up. Yeah. If euro becomes very strong, this will go up. And at the same time, if JPY becomes very weak, this will go up too, right? So as long as JPY is super weak and euro is very strong, they can both move in the same direction, even though it seems like they should be polar opposites. So in this case, what's happening is that the USD, the actual USD pair, is actually having less effect on each pair in relation to that correlation. Do you see what we're saying? I hope that makes sense to some of you. So it's all about the last push, bull or bearish. No. That only matters in the most recent model from an accumulation or distribution perspective, in which case you can also stay out until it meets up with what you expect. So no. So once again, very simply, UJ is setting up for a very, very nice bullish week. Now again, if you are a lower time frame trader, let's say, does it make sense for you to, well, I mean, in this case, we're in this big displacement here, so it wouldn't make sense. But theoretically, if you were a lower time frame trader, does it make sense for you to start trading, if you wanted to, some of these intermediate pushes like these and start confirming some of these areas like that? Yeah, it's perfectly fine. But again, you're having a lot less context there because now you're giving up a lot of space, right? You'd probably want to wait for this to build something more clear, right? You'd probably look at the model of the intermediate at least. But even here, like the real MB is still here, right? So I'd probably stay away. But yeah, this is a very clean market for bulls as well. And again, many mentorships will never be able to go to you and be like, I'm bullish on UJ and EU. Because it's like, what the fuck? In some cases. But in this case, it's beautiful. It's delivering as it should. And that's what we're going to follow. Move this down. Move this in. Zoom in. Move this left. Move this here. It's a 4-hour S&D 2.0. And it's a 1-hour MB of a MB, what is it? MB1. So yeah, what a lot of people, I'm not going to do other pairs right now. My brain is broken, but I think EJ just invalidated whatever I saw on it. It's been bullish. I've been bullish. It made that bullish move. Right now, you know, could be reaccumulation. So whatever it's in right now, you could look for longs, but I'm not. My brain is fried at the moment. Like there was a lot there to unpack, and I had to basically, what is it? Dude, I'm lost for words. I had to schedule. What do you call it when you put stuff in order? Like the way you speak about things in order. Organize? Nah, something else. This is a good word for, I don't know, whatever the good word is. Systemize? Nah, none of those. I just had to, no, not schedule. I just had to decide how I was going to get across everything because again, it's very hard to do it in one quick video. And I hope that the new people that have just seen this video, one, welcome to the mentorship, but two, recognize what you're working towards. This is not just a little joke. There's a lot of skill that comes with what you're doing here. There's a lot of time and experience that needs to be gained with what you're doing here. And there are deep layers to what I teach you here that go beyond the scope of the little Instagram posts that you consistently see and have been taught to think that the market moves like that you've currently looked at. Okay? Yeah, it's time to put in a few 1,000 hours. A few thousand hours, but you're going to put yourself above everyone else. Yeah, teaching is not easy. I mean, it's easy for some people because they don't actually teach. But yes, teaching is in many cases hard because you want to get a lot across and you want to do it quickly and you want to do it for people that are new, that don't really, you know, might not believe you, might not see the value in what you're teaching, have been other places and don't have no clue what the fuck's going on. But yeah, guys, listen. Thank you. Thank you all very much. Huge blessings. And I gotta go get some hibachi actually, because I think we have a reservation in 15 minutes, so I gotta run. Guys, listen, thank you so much for being here. This is going in the welcome section as well as the normal webinar section. overall expectation on the markets is as provided as shown today. Elliott, we can focus on something considering that next week. But very simply, I'm overall bearish on crypto, but it's a little bit less clean. It's pretty ugly. US 100 pretty bullish on. We'll look to follow longs this week. Euro USD bullish, starting to get really good. Make sure you don't trade your context and make sure you don't trade bad context and trade your rules. UJ longs as well. Looking very good. Looking to follow that all week. All right, guys. Bro, it's like a Twitch chat, bro. All right, thank you all so much for participating. But for those of you where it is actually your first webinar, I want to welcome you with open arms. You've found one of the best places for you to learn. However, as we love to say, it is going to now take time, right? I no longer have to sell you on anything because you're already here. But this is where I'm going to start giving you some of the real truths, which is that there is no instantaneous, a little profit potential, little edge that you just learn and now you're good to go. There's going to be time that you're going to have to invest, a lot of work that you're going to have to put in, quality work that you're going to have to put in, testing that you're going to have to put in, but that's going to put you at the level that you want to be at, hopefully, if that's something that you're actually serious about doing, and as a result, you're going to grow, right? You always say first webinar, so Matt may welcome you again. Nah, I know it's not his first, man. I know it's not his first. Good morning. Big Chief, what's up, man? Found, not found. Hey, man. What's up? All right, let's get the screen share started out here. Oh, I almost ended the meeting. Okay, that was close. Here we are. All right, just double checking. I know you guys can hear me, but can you see the screen? Everything on top of here, everything good? We're recording? Yeah, we're recording. We're good to go. We are good to go. So we're gonna get right into it. I have a little bit of a plan for today, a little bit of a different plan personally. So a lot of you might have seen that we started, not started, but we've let out a very, very basic starter to the, no movies today, nah. We've let out a very basic starter to the MentaFX Mastery, right? And that would be very brand new, number one, nothing more at the moment, just an introduction for those people that are completely brand new. And I'm trying to do the best thing I can in regards to structuring this in a way where someone that's brand new can actually pick up the most necessary things in the start and then make their way down. But as a lot of you may know, that's a very hard thing to do because the depth at which we teach and the depth at which we now analyze things and do things, was only gotten to through multiple buildups, right? So on my end, as a mentor, I'm figuring out how to structure this in a way that makes a lot of sense for people that are completely brand new. We're gonna get the disclaimer in a second, don't you worry. So we need to find a way to structure this in a way for people that are completely brand new to actually understand what's going on, but also to start focusing on the right things, like in Webinar 100, as a lot of you may know, those of you that aren't new, right, what is kind of the main thing that someone should approach the market from, or what lens should they approach learning in this industry from, right, when they first start? Right? Yeah, so Mateus, John, exactly. So no, it's not SSC just yet. JD, exactly, right? So this is the interesting thing, right? Many people, regardless of whether you're new or even intermediate, right? Regardless of where you're coming from, unless you're already profitable, there's a high likelihood that this is you, right? You come into a new mentorship, a new video, whatever it might be, with the expectation that it's time to now see a strategy, right? I'm here and I want to see the strategy so I can decide whether this is a strategy that's good for me, that it makes sense, that I can predict the market, et cetera, right? Because out of a strategy, what do most people want if they're kind of starting out or intermediate? Well, every strategy is going to be, I want to be able to predict where price is going. I want to be able to predict how it's going to do it, blah, 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 right? That is the first thing that everyone wants to do. And that already sets a precedent for how they're going to be learning. And what I mean by that is now, no matter what strategy they learn, what's going to happen is if they're not seeing instant ability to predict things correctly, or the strategy working in such a way that everything just makes sense and everything just comes together beautifully, then they're going to feel like they need to find something new. They need to make a switch. They're going to get the shining light syndrome where, they see a shining light, YouTube video, Instagram, Telegram, a new firm, a new discount, blah, blah, blah. And they want that shining light because they think that that's going to be the answer now, right? So for the people here, even today, that just said, the first starting point is SSC. It's actually not, right?
starting with a starting point of just strategy doesn't actually do anything for you. Whether you learn a 99% win rate strategy or a 100% win rate strategy or a 20% win rate strategy, right? Whatever that strategy is, it won't matter if you don't have a precursor to what you're going to be doing to learn that thing. And those two main precursors, so without me just saying nothing here, those two main precursors are the following. It's understanding that you approach the markets from a risk-first mentality. That's number one. And number two is from a maximizing experience standpoint. So let me close my OBS here. I know it's recording now, so we're good there. There we go. Okay, so a lot of you got it right here, right? Webinar 100, a huge focus of it was maximizing experience. But what I want to do today, and it's gonna be a little bit different. We're still gonna do our same thing. We're still gonna go through Q&As. But what I want to do is I want to kind of allow this webinar to act as the next stepping stone in the remastered course, where I basically go back to webinar 100. We'll talk about it a little bit, as well as talk about the two main things that people that are new should have a focus on and why their focus should be on that. So as a lot of you know, for the remastered course right here, the two main things I want to get across, this is one of them right here. The two main things I want to get across before anyone even pursues an actual understanding of a strategy, how the strategy works, all the fun stuff that comes with the strategy, predictions, confirmations, how to enter, how to manage, all this cool stuff that everyone wants to do. The first two main principles of actually building out a profitable system for yourself are going to be these two right here, right? Number one is going to be approaching the market from a risk-first perspective, first thing. And number two is through maximizing experience. Now, these can be like almost interchanged. They're both very, very important, and they're the fundamental building blocks to any good system. Without one of these first, no matter what indicator you're given, no matter how good the concepts that you are given are that I provide are given, it will not affect your profitability because you have nothing that is formulating the way in which that you should go through that strategy, okay? So what I mean by that is webinar 100, a lot of you know, a main focus of it was this guy right here. And as a result, maximize experience. And as a result, because of the fact that it was about, 3-4 hours, one of the main things we discussed was how to maximize experience and then what you're working towards, right? So a lot of you might remember that. And if you don't, if you're brand new, welcome. You're going to understand what we're talking about and teaching very, very soon. But webinar 100 basically broke down this right here and how in-depth you should really approach the markets from a maximize experience standpoint. And then we went into a deep breakdown of most of the tools and concepts that we use here at MentFX from a zoomed out perspective, right? And the way that I want you guys to think about the remastered course, because this video is likely going to be in it, is that my goal initially, especially if you're new right now, is to confuse you. Okay, my goal is to set a precedent that you understand and then confuse the living shit out of you when it comes to the actual markups or what's going on or why we're taking trades or why MentFX took this long, right? This long this week and made great money on it, right? The thing I wanted to set out before we even started a remastered course where we're like, oh, here's the concept, here's this concept, get to it. Because a lot of people, and you've seen it happen firsthand in this mentorship, will join, see section 1 and 2, start back testing, wonder why they're not finding the profitability they were hoping for, or wondering why they're still a little bit confused and can't really put the pedal to the metal and really understand what's going on. And I'm just sitting there like, holy fuck, how do I explain to this person that they haven't covered even 0.2% of the course and already they have this need to get onto the charts and start really experiencing the price for themselves, right? It's not teaching them anything, right? So that is why for a long time now, new people that have been joining, the answer has always been, you need to work through the course. It's long, but you only have to do it once and you're never going to have to do it again. And once you understand it, there's nothing else to do. You just know the next steps you need to take. But at the same time, it's hard for someone to go, okay, I'm going to do it. It's much easier to go, nah, there's got to be a video. Nah, there's got to be a remastered course for me to see. Nah, there has to be a remastered concept where I can just get it right now and move to the next step. And it's like, yes, I want to put that out for you. I want to make sure you have that. Luca is asking, should I watch the remaster? You can. The remaster, you're free to watch it. The only thing available in it is this introduction video. That's it. But the point is, it's very hard to get that across to someone that already hasn't started, at the very, very start. And then the other people, you have the other side of the spectrum where you have someone that goes, fuck it. I paid, I might as well. I don't care. Here I go. He says it's going to take me 3 months. I don't believe him, right? I don't believe I'm going to understand what's going on in 3 months. Everything he's talking about in these webinars makes no sense. They go for it. 3 to 6 months later, they are kind of astounded by their own skill and their own ability to understand what they're doing. And then that's when you get the same testimonials you see week after week, the same testimonials you see online in the YouTube videos, in my Instagram, where people are like, I had no clue that this is what I was going to be able to do, 6 months ago. I didn't think, I didn't even realize how far under a rock, I didn't realize how much of a Patrick Star, for those of you that watch SpongeBob, I had no idea how far under a rock I was until I just kind of succumbed to the 6 month, 3 month, 6 month process, right? And then a lot of those people, so that's the other end of the stick, were the people that said, fuck it, I'm going to go through section 1. Wow, okay, it's a very fundamental, I have no idea how I'm actually supposed to start now. Section 2, okay, still pretty, fundamental, don't even know what's going on. Section 3, okay, still pretty, there's a lot more here. I'm finally learning something, finally I'm getting some kind of information, but it's still like kind of fundamental. What am I learning? Wow, okay, start with webinar 1. Oh, this is getting kind of deep. 2, 3, 4, get to 14. Holy shit, so there's ways in which we've evolved section 1, 2, and 3 into what I see now. Getting to the 30, 40, 50, etc., you start hitting 100 and you go, holy shit, I don't know how else I could have learned this unless I went through this evolution. Right now, granted, I am working right now as we speak, and this is actually going to be part of the videos, on this next intro video or this next focus video, or rewiring video, that's going to hopefully be a precedent for everybody that starts, right? The webinars, as you all know, are always going to be the thing that actually pulls everything together. The webinars are where you're going to see it happening live before it ever happens, breaking down trades, exactly how we're trading, the 2 styles of trading, all the fun stuff is broken down in the webinars and shown live, right? But the only way that I get someone who is brand new to go ahead and watch the actual remastered course is by setting a precedent for what that means. It does not mean watch a video, take a step back, and enjoy yourself. It doesn't mean watch a video, go to the live price right now, look at gold, say, where's it going? Probably going to go for this low because it's breaking down, right? So I want to see it go to this low. Ment, what do you think of this? Right? These kind of things are going to be useless to all of us, right? It's not going to help you. It's going to stagnate your own learning. It's going to make you need to stay on board for longer than you might want to stay, right? My point, as a lot of you know in this mentorship, is not to have you stay on for the purpose of needing to learn more. The only thing I want out of this mentorship is to build a community where the people that stay on want to stay on because they love the kind of people that are here, the kind of talks we have every single week, the kind of ability we have to, talk back and forth between each other, the non-toxicity that brings with a paid community, etc. I want the people that stay here 2 years, 3 years, 4 years onwards to do so because they just want to be part of the community. I don't want someone to be here because they really just haven't gotten it yet and need the deepest knowledge and more depth that I'm saving for later so I can get more money out of you. That shit doesn't matter. What I want is for someone to join and have their first 3 to 6 months hit everything they ever need to know about doing this for the rest of their life for themselves if they really want to do it. That's my biggest goal. So as a result, I'm focusing on making a remastered course that can do that, but I also know that what exists for a reason, and there's a reason that the people that have gone through it and have decided to take that approach have been able to consistently, as you see, testimonials, all the fun stuff, to do it, right? And then those are the same people that actually end up staying on, right? So as a starting point to this webinar and as a starting point to the remastered course now, right, I want a lot of you to realize that I want to give you everything you ever need, and I'm going to do the best I can, but it's going to require that you actually show up to either these ones right now, like you are, so thank you for those of you that are showing up, or it requires that you watch through every single part of this upcoming remastered course I'm going to put out. And this is the last I'm going to ask you to do that for the remastered portion, because it's going to get old for me to keep asking. So this is the last I'm going to say. If you've made it to this point in this webinar, so Osri says, when will it be out? This webinar is going to come out as they normally do, but I'm going to make it a segment in the remastered course. And the remastered course is going to be built over the next, whatever. I'm working on my best way to do that. But the point being is, if you're watching this webinar right now, so not the people that are here right now, the people that are here and brand new, congratulations, you're hearing it for yourself. You 143 people, beautiful people, are hearing it. But the people that are watching this in the future from the remastered course, because that's where it's going to be, this is your final reminder that you should at least, at the very minimum, finish the full remastered course and start showing up to live webinars. This is your last reminder to do that. I'm not going to go ahead and be like, go watch it every video. It's not important to me anymore. If you skip stuff and you miss important stuff, that's on you, right? Everything that we're going to cover is going to be covered. I want to make sure that it's all covered. I want to make sure you have everything you need ever, okay? But it's going to require work on your end too. It is not a one-man job. A mentor can only do so much. A mentor can put in 90% of the work, but if you are not even willing to do the 10%, which would be watching it or listening and then starting doing it yourself, then there's not going to be a synchronized relationship there, and you're not going to make it, right? And that's going to be no one to blame but you, but it's going to end up giving you what we call the shining light syndrome, where you start wanting to go into those different directions, right? Because you haven't actually laid a foundation first. Now, to further this idea of laying a foundation, there are two main things that I discussed right at the start of this webinar that I said are going to be a main focus for laying a precedent for what you're about to do, and why I'm laying this as a precedent. So within this remastered course, there's going to be this webinar, which is webinar 111, and webinar 100. Both of the webinars will be there. The two reasons that those webinars are there is, one, to rewrite the way that your brain currently functions. I want to rewrite the way that you think subconsciously about trading, about approaching trading, about what trading actually means, and that's going to be done through this. And number two is, as you watch webinar 100, on one hand, you're going to get a better and even deeper understanding of why experience is very important, but two, because I want to confuse you. It is my job in these very starting points, for those of you that are brand new, to confuse you with the things that we do. And here's an example of that. For instance, hey, I've taken a trade on DOCN. Yeah, it's a stock, okay? Can you trade other markets that aren't stocks? Of course, we do that all the time. I actually trade more things that usually aren't stocks, except for recently, honestly. But on this stock, why did I enter this long? The reason for the long, and many members that have been here for a while will be able to tell you, but the main reason is that we went from an underlying stage one and that stage one was brought to us by a multitude of back and forth MBs into an MB to the top side that became an absorption, or an SSC, that moved into a double MB, which put a precedent for a potential accumulation model to be present in stage one still. We assume that we're entering stage two now. Instead, price enters SSC again, which is perfectly fine. It shows you that it's deeper in that stage one, which is fine. Undergoes a run up into more MBs, makes about 3 or 4 MBs upwards. This is now assuming a stage 2 market that now wants to accumulate and go, whether it be through explosive price action or through reaccumulations. Price re-breaks down. We instantly assume that to be a reaccumulation due to the fact that most MBs are moving upwards from an accumulation model, especially with a higher time frame that's been showing bullishness. You expect bullishness. You can now start entering bullishness off of intermediate, lower time frame, or ICIs. And very simply, ICI. This is a phenomenal entry here. There's a phenomenal entry here. It makes the huge impulse, showing that this clear bullishness starts breaking the higher time frame here that we don't even have to see, but we get this MB break up here, which validates a reaccumulation model. Price pulls back, not even into a deep zone. It doesn't even matter about that, because then it begins to surf a rising 20 MA or creates a new ICI, gets tight and breaks out. Now, those people that have been here for a while and have also seen up to the most recent webinars, and I want you to go ahead, if you're someone like that, please let me know right now, understood everything I just said as clear as day. It's almost boring to them that I said it, because they're like, yeah, of course I know what he's talking about. The people that have been here and have done the things that you are supposed to do, yeah, there you go. The people that have done the things that you're going to be doing understood everything I just said as clear as day, even if it sounded like a jumbled mess to you. And what's beautiful is, through this remastered course and through you showing up to live webinars every single week and through you showing up to our outlooks, you're going to cement subconsciously the things we do every single week into your mind, and you're going to get very, very used to them. And as far away as it seems that the mountain lays, if you, like I love to say, trot it step by step, one by one, the second you look back, you're going to go, holy shit, how did I climb this mountain? And on average, because I want to give you all the true math and statistics of everything, on average, the amount of time I see it takes for a member to get to a point where everything I just said makes clear as day sense and they're already in their own boat now is from anywhere between 2 to 9 months. That's on average what I've seen. And that's just to do with, how did they approach the course? Did they try to skip shit? Did they just go through everything, allow themselves to go through it, and did they have the time? Right? Did they have a lot of time to go through it instantly, or did they have to take a little bit of time? So on average, that's what your mathematical statement of how long is it going to take me. So if this is like your first month and you're like, I'm showing up, but I don't get it. It's good. You're at least confusing yourself, so we can work on unconfusing you. And one of my biggest mottos is that if you're confused, you're actually doing something right? The idea is if you're not profitable and you're confused, that's a good thing, because that means that there are things to learn and things to unconfuse yourself about. On the other hand, if you're unprofitable and unconfused, do you see why that might be a very large issue? Right? So it's very important that if you're brand new, there's clear confusion that undergoes when I break down something like this, and you're not fully profitable or understand the steps you need to take to become profitable now. I hope this confuses you, because it's necessary that it does, right? Because now we're going to break down what is going on there. So let's jump into these two things right here, and then we're going to jump into talking to a few of the members here and going a little bit deeper. And of course, as always, every webinar, including this one, is going to end with a breakdown of a market, a breakdown of some kind of trade to show you the same things being used again and again, and then an outlook. Because that way, even when you're new here, again, you're going to see what you're working towards. And that is one of the best things that you can do as a trader, is to see what, one, you're working towards, and two, what you're about to be taught so you can do for yourself, right? And again, as you start watching webinars, including previous ones, not just the ones in this remastered course now, but the ones through the webinar recordings, like 90 and onwards, 100 and onwards, you're going to see firsthand how over years, and I'm talking about years, and members right here, you know what, why not? Because the members have been here for a while, and hopefully the person watching this who's brand new is seeing this. The members that have been here for a while can attest to the fact that the tools that we use haven't changed, one, and two, were the same tools that we used to stay in this market entirely during all of basically 2020 until 2022, and start going bullish around these points here from around January of 2023 into current, and we predicted this entire bullish run. So that's one, that's just on EU, and that goes the same for all the other XXX USD indicators. EJ, UJ, and all those other things, we've discussed the longs on these for years now. UJ, we started going long. You can see I even drew it. We started going long around here with the team using the same tools. The tools have been refined and gotten better, but we were long here, took this all the way up, became people that sat out or went short inside of here, and began to follow longs again around these points here through the webinars, and are now still currently long, expecting the run upwards. This has not changed. You're going to notice, no matter at what point you come into this mentorship, that the things we do each week do not change, and many of the analyses that we do don't just shift randomly. Just because we got this random breakdown to the downside here hasn't changed the underlying of what higher time frame to this time frame is telling us about this market, as it hasn't changed the lower time frame. Well, the lower time frame changed a little bit, as a lot of you remember. What did I actually say to a lot of you on the 15-minute charts last week, right here, when it made these breaks? What did I say you could do all week long, and was likely going to be very good if you traded a 15-minute chart or below? And again, for those of you that are new, you're going to see firsthand what our members that have been here last week spoke about, right? And here you are. I said basically, if you're trading a 15-minute or lower, taking shorts this week are going to actually be likely very, very good on UJ, right? And I said, if you're trading anything higher, like a 1 hour, a 4 hour onwards, I wouldn't touch it. I would probably just walk away, unless you're maybe trading an ICI method, in which case, these ICIs are okay to follow, but even then you can see they start getting a little choppy, and some of them don't give the best entries. Nonetheless, what you need to understand is that, one, you're going to be learning how to do this across all time frames, any and all time frames in any and all markets. And two, you're going to learn how the same thing repeats on and across all markets. It's just a question of which market is cleanest to follow at the given moment, right? What is good to follow at this moment? What is clean? What am I actually willing to enter on? So, firsthand from our members here, the same tools have been used forever, and we've used them to predict these movements beautifully over and over and over again. And it doesn't stop, right? We do this consistently and over and over and over. Like, here's an even better question to the members that have been here for a while, right? I'm going to ask you, what is, given the fact that, we've went through a few reaccumulations now, what is this model when it even made this first break, or even by the second MB? What is this model on a 1 hour chart? So some people are saying reaccumulation, but no. On a 1 hour chart, given the fact that we've made bullish, bullish, bearish, bullish, 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 bearish, 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 right? At this point, I mean, honestly, so I actually am not gonna take points off for you guys saying it's a reaccumulation, because it could be, and it likely is due to the fact that a higher time frame is pointing to bullishness, but this could also be a distribution. So in this case, this is where you have a little bit of both, right? And this is where you prove yourself. But at the moment, if all you had is this 1 hour of the, what is it, EU, you could assume, or you could argue there's a distribution here. And now again, my question to you would be, so let me ask the team this. If you're trading a 1 hour or above, does it make sense to start shorting this? Yes or no? 1 hour or above. Fantastic, right? And the reason that you're now seeing this slew of answers of no is because people have taken the time to understand in a lot more depth what we do. Now, let me ask you a further question. Due to this bias or context of the 1 hour being a potential distribution, if you were trading a 15-minute or below, could you take a short? Could you begin to look for shorts? Right? And lo and behold, again, you have a slew of answers, right, that match what you would actually want to do. And this is fantastic. This is what I want to build out of people. This is what I want people to be able to do for themselves, right? This is completely correct. So for the guy that asked why, the reason why is, if you remember, a higher time frame has been pointing bullish the entire time. Everything's pointing bullish across the time frames. We've been bullish on this thing for weeks now, and if you want to know how we did that, you can check the webinars, which means that on a 1 hour, where again, this model here could be a reaccumulation or distribution, well, following shorts in an underlying bullish market where it could be a 50-50 between bullish and bearish when it's already bullish, to now start taking it bearish is one of the easiest ways to just be wrong and lose money for no reason, right? Because if this is a 50-50 of reaccumulation or distribution and everything's pointing towards bullishness, why are we using this time frame or higher to go bearish, right? That is where mistakes are made. On the other hand, if you're trading a much lower time frame due to the fact that it's shown you it could be in distribution, and on this time frame now it's redistribution, breakdown, redistribution, breakdown, redistribution, SSC break. Well, now if you get a clear ICI or a clear SSC entry, there's no reason you can't follow this on a 15-minute or below, right? There are going to be endless amounts of traders that could be following 1 second, 5 second, 1 minute, 2 minute, 3 minute, 5 minute charts and get just a short from here to here and make their 20K for the month, right? That could be their entire play. And in this case, it would make sense to trade that due to the context of this time frame in relation to that lower one. But to trade this one as a shorting time frame or higher, it now makes no sense, right? Because everything is pointing towards a generally longing context, right? So this is where this idea of time frames don't matter come in, where it's just a question of, with the time frame that you want to trade, does it make sense contextually across the timeframes that are basically near it, or the timeframes that make up the context or models of that time frame? And again, for those people that are now watching this as part of the remastered, hopefully everything I just said is still confusing as shit to you. That is good. Now I'm going to take us one step back to where we were a second ago, which is right here on this page just for a second. I'm going to go down here to make sure everything is okay. We're gonna read over a number of these soon as well. Short can work as the H1 is distributing on a lower time frame. Yep. Looks like a Yep. Why was that a distribution there? Was no back and forth on the 1 hour. JD Snowflake. Yeah. Hosey. So Snowflake rule, really, right? Zoom out sometimes. Ask yourself what's the left to right of a bigger zoomed out. The bigger zoomed out is bullish, bullish, bearish, bullish, bullish, bearish, 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 bearish. On average, due to the fact that it's like 4 breaks down, that could be a very bearish sign. So as a new member, should I continue watching the current course or wait until the remastered? I would 100% continue. So Spiro, something that I love to say, I'm gonna put this out there, is the only thing that I have proof has worked for some people, right, is exactly the steps that you're taking right now. We don't see your chat. You don't see my chat? Can anyone see my chat right here on the right? Okay, you can. Okay, so Spiros, not Spiro, sorry. So Matik, you gotta fix that for yourself. So what I like to say is that the people that have made it to where you're trying to aspire to, some of the people that have made it, most people fail, don't forget that. We're gonna do a disclaimer soon. They did it through doing the exact step that you're currently taking for yourself, right? We can't see your chat because it's live. You will see it in the recording. Oh, I didn't know that. That's interesting. Okay. I didn't know the chat's not visible in my screen share. Interesting. Very interesting. Okay. Make charts bigger. Well, I still want my chat to be on my actual, on my screen. That's all. Because I don't want to look away from the screen. Okay. So Spiro says, as a new member, what should I do? Should I wait? I would not wait. I would continue with everything that you have, right? I would go even from webinar 100 as per welcome, right? Because again, that welcome webinar 100 is going to go directly into the remastered course. Literally, it's going to go right there because it's one of the best ways in which I could get what I want to get across that I can't just re-record like, oh, hey guys, so today I'm going to talk about maximizing experience. Make sure that you focus on maximizing your experience because it's important. And then someone new is like, what the fuck does that mean, right? That's the 4 hours right there that I dedicated to that, plus the concepts that are meant to confuse you so we can now work on unconfusing you, okay? So 2 main things I want to talk about today, and then we're going to move from there. And that is that, so I even wrote down a little bit about this because I really want to hone in on this, and it's that whenever we approach any system, and this means that whether you go through me as a mentor or any other mentor, okay, anyone in the world, I don't care. If you end up leaving MentFX, I want you to take this at least with you so that way when you learn from anybody, you actually understand how to use kind of the things that you're learning, okay? And that is that when you approach any system first, before you even learn the strategy, the indicators, the tool, like whatever it is, anything like that, the first 2 things you need to make sure you understand for yourself is that you need to approach from a risk first perspective and then from a maximizing experience perspective. Okay. And here's why. The way in which you personally, you as a person, understand risk or think about risk, okay, is going to decide how well you actually learn the strategy and then whether you're going to be profitable or not. Okay, so that's kind of the first step. You can write that down as a bullet point for yourself, but that's the first step of why we're going to assess risk first. Okay, if you don't do risk first, the strategy is going to literally end up not mattering. Okay, here it goes a little further. So I wrote some of this stuff out because I wanted to make sure I get it across today, but the strategy does not matter without a risk first understanding from 2 standpoints. First, from a simple calculation standpoint, so how do we actually calculate risk? So we're gonna talk a little bit about that because a lot of people have issues with that. You know, how do I calculate it based on the leverage, the contract size? You know, how do I even think about that? What's going on? So that's something that we just need to understand. But then there's a risk first from a strategy standpoint as well. Okay, and here's why. If you approach a system without a risk first understanding about, you know, why is it that we even trade? How do we even fucking trade? Like why are we even taking risk on? Like what even is fucking risk, right? So if you don't take the time to understand risk first for any system, you'll instantly be caring about the wrong things. Okay, so now we're going to go a little bit deeper in this. This is where it gets really, really important. If you don't initially understand something like RR, or risk to reward, right? I'm putting up $1 to make $1, or I'm putting up $1 to make $3. I'm putting up $1 to make $10, right? That's RR, right? How much are you putting up as risk, and how much are you potentially gaining if you win, right? And then if you don't understand how to partner that with something like win rate, right? You know, like how high does my win rate need to be, or low my win rate need to be for me to make money or make a lot of money, right? So those things are parts of risk, of course. Now, if you don't take the time to first understand that risk is the fundamental building blocks of trading, can any of you guess what some of the wrong things that you're going to start worrying about initially in your strategy are going to be that aren't actually going to matter if you first approach from a risk perspective? So let's say I now start teaching you a strategy, but you have no understanding of risk initially. What is one thing from an emotional standpoint of being a trader that you're going to really hate about that strategy initially? Yep, John got it. Exactly. One of the things is that the first thing you're going to think about as a trader emotionally, or as a person learning, is win rate, right? The first thing you're going to think is, if I can't predict the direction correctly every single time, then I must be doing something wrong, right? I'm clearly going to be losing long term. I'm clearly unable to be correct, right? So one of the first things you think about if you don't have risk is that if it's a crossover and the crossover doesn't deliver, what do you instantly think, right? If the crossover doesn't deliver 100 pips instantly, what do you think about that simple strategy right there, right? Yeah, I can't make money doing this. It's clearly not going to be delivering. I'm clearly wrong. I'm clearly not always right. So you're now caring about the wrong thing. You're caring about how right am I going to be? What is my win rate, right? Then you start going a little bit further. If you don't understand how risk pays for reward, if you don't understand how money made pays for your losses that you normally take, if you don't understand how taking profits correctly actually builds your account, what are you going to do as a trader emotionally when you have, let's say, a trade running and you're in a little bit of profit, or even a quite a bit of profit? What's the first thing you're going to do as someone that does not have a risk first approach? Beautiful. You have a cut it early approach. You have a must secure my gains attitude. Exactly. Right? So again, if a risk first approach is not established, then no matter what strategy it is, you're going to be caring about being correct. You're going to be caring about the win rate. You're going to be caring about the thing that you draw or your analysis holding or not holding. You're going to care, or you're going to take actions that are going to set you back, like taking money off because you're in a little bit of profit, or because you've seen more profit than you've ever seen before, right? And to further that a little bit further, what do those kind of mistakes lead to? So what do the mistakes like taking profits off early, not cutting your losers, letting your losses get bigger, what do all those things do? What do they all lead to? Yeah, a blown account. Okay, so the first thing that we need to recognize about us as traders, or about us as a teacher to a student, to a pupil, to a member, right, is that if we don't first establish that all we're doing initially is understanding risk and how risk works, then no matter what I teach you, no matter how good the concept is, the prediction of the concept is, you're gonna make all the issues. You're gonna make all you're gonna have all the problems that come with being a losing trader. And I want to take this a little bit further by looking at an example in front of you. Okay, so here's DOCN. I'm gonna give you guys something very, very interesting now. Now let's say I have a system that can very well predict where price is going. And let's say you do as well. I taught you a system, but we don't have a risk first approach yet. Let's say we know, okay, price is going to $60. That's it. We know it's going there. Right here, it's going there. Well, what do we do with that information now? What would any trader that hasn't learned anything about risk do with that information now? Price is going to $60. What are we going to do, guys? Yeah, we're going to click buy. Okay? Now, the first question is going to be, where do we exit? Well, clearly, if we're a trader that is just willing to go, what are we going to do with our exit? Where's our exit going to be, guys? Come on, everyone knows where our exit's going to be if we're a brand new trader, right? Yeah, there's not going to be an SL. So hopefully we're going to enter with as much as we can that allows us to basically, if price bankrupts, if this stock goes bankrupt, then we'll be out, right? That's how most people will approach a trade at first, right? There's no such thing as a fucking stop loss. There's no such thing as putting on risk. There's just, I'm buying it because I know where price is heading. Okay, so I know it's heading to 60. Okay. Now I'm going to go into a little bit of a deeper thing. So now, for those of you that are new and don't know about this, here's a risk to reward. Very simply, what this risk to reward number means, all it means is how much you're going to be rewarded for each dollar or for each value of risk you put up. So very simply, if you put up $1 of risk, so what that means is that if price goes to bankruptcy and you lose $1, then you'll lose $1, right? So if price goes here, right there, you're going to lose $1. That's it. Price went bankrupt. On the other hand, if price hits the 60, how much are you going to make? 20 cents, right? You're going to make 20 cents, just like that. Okay? So, okay, great. We made 20 cents for risking $1. That's fantastic, right? In some cases, this could actually be a system that you follow and that could work. Big banks, hedge funds, all this stuff, some of them follow systems like this and make money. And because they're doing it with much bigger values, like in this case, let's say they do it with $1 million, right? They just made, what is that? 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. So they just made 200K. Yeah, 200K. Thank you. So a bank just made 200K for that trade. Great. Fantastic, right? That can be a system and it could theoretically work. Now we're going to talk about some of the problems that come with this, right? So if you just have a strategy that tells you where price is going and you know where price is heading and you risk, let's say, something like this, well, on one hand, it might work. But on another hand, so this is where it gets very interesting, and this is why risk first is so important. And this is why you're all going to start understanding we love losses and we actually need to take them, okay? So this is going to be another way to view that, but we're going to look at that right here. So let me ask you guys what happens. So this is a daily chart, okay? Now, it doesn't matter. This can be any time frame, but in this case, it's a daily chart, okay? Now, what happens? Well, okay, so what are the two things that this price can theoretically do now? There's two things that this price can do, right? It can go up, right? Yep, it can go down. Exactly. It can do those two things. But of those two things, there's two ways that it can go up. What are the two ways in which it can go up now? Think the fox and the hare. Yeah, exactly. Good shit. So it can do it fast. Okay? Good job. And it can do it slow. Which means what about the other side? If price is going to go down, how can it do it? Yeah, it can do it fast. Go, go, go. Or it can do it slow. Now, let me ask you something. If price starts going down and starts doing it slowly and does something like this for a little while, you know, given the fact that you have this analysis, should this trade still be held? Given the fact that you have your risk set and you want price to get to 60 because that's where you know price is heading. Of course. There's no reason not to hold this trade. Now, does anyone notice anything interesting about the fact that that's happening? Well, now, in this scenario, if price just did this, where it's going to move slowly, you're about to spend 300 days doing nothing but waiting. Now, that might not sound too bad because on your end, you're like, well, I'm still going to make money because I know it's going to go here, right? But the question is, how long can it take to get there? It could take 300 days. It could take 600. It could take 900. It could take 20 months. And we never think about it, but let's take that a step further. If we have money that we've put on risk here, what does that mean innately about our overall money, right? What does it mean when we have money? Yes, perfect. I wanted to see if someone could get the answer, but yes, Mayo and Soren, your money's blocked. It's tied up, right? It's locked up. Your money's locked up, which means what? If your money's locked up in this trade because you know it's going here, it's just doing it slower, what does money being locked up in the trade mean? Beauty. You cannot take other trades, right? You can't put your money to work anywhere else, okay? So on one hand, if your strategy is so good that you can predict the direction every single time perfectly, but it means that your money's going to be locked up for anywhere from a month up to 20 years, is that a system that makes sense to follow even though the strategy is 100% win rate? Or 100% consistency, right? Well, it's probably not 100%. It's always going to be like 90%, 95%, 99% because there's always the oddball. But the answer is always no because your money's locked up. So you're never going to actually make money. You're just going to be sitting on money most of the time, okay? And again, let me ask you something further, guys. If you didn't look at price from a risk-first approach, would you have been happy with a system like this? If you didn't look at risk first, are you happy with this kind of system? So think about the answer for a second. Guys, if you didn't think about prices or about trading from a risk-first approach initially, are you happy with a system like this that is showing 100% win rate, is going to always get to your analysis most of the time? Are you happy with it? Someone's still saying no, but the answer is of course you are. If you never approach trading from a risk-first approach, which is what I'm teaching you to do, then anyone would be happy with this because again, the things that they think is correct, which is high win rates, always being right, taking profits once profit starts being made, all of those things are great, right? Let prices run while they're losing, wait till they make us money, right? So if you don't have a risk-first analysis of trading initially, or you don't understand risk, well then of course, you're gonna be very, very happy with this. You can still enter multiple trades if you still within leverage. Okay, sure. Let's enter 3 trades like that. Now your money's locked up. Now what? Are you happy with the fact that your money's locked up and now you have to wait anywhere from 1 to 20 years to see if it might win?